There's something magically muscular about the American economy. Tall buildings, steely-eyed businessmen, the dream of untold riches for all. But in the 1990s, it seemed we'd entered a new age of capitalism where shares always rose in value. Companies magic profits from thin air, and everyone was a winner. But now much of that has turned out to be an illusion. Fraud, fantasy profits, and fiddled accounts have cost millions real money and real jobs. Lower Manhattan, the beating heart of American capitalism, where fortunes are won and lost at the blink of an eye and the stroke of a single key on a keyboard, and where a man's word is supposed to be his bond. Corporate America is being rocked by financial scandals. Shares are tumbling, and people are realizing that capitalism hasn't changed. It's as easy to lose money as to make oodles of it. The key question now is, who can you trust? That's what they're wondering in Houston, home to Enron, the giant energy company that collapsed last year. It cost Janine Howard her job as a sales executive.
We were treated as coldly as, anybody can be treated, as far as no information, no guidance, just go home, leave the property, or we're calling the police.
Very early in the morning, she gave me a call saying that she had been told that Enron, they had closed the trading desk at Enron, and told her that she didn't even need to come in. And she was absolutely devastated. It was really, really awful. And of course, the following days, as the news broke more and more about all the terrible things that Enron had done and all the sort of shenanigans that had been going on, it was made even worse.
But this is America, where every misfortune is an opportunity. Janine rolled up her sleeves, took off her shirt, and pretty much everything else. She and other Enron women posed for Playboy magazine.
That is a fantastic picture, and how appropriate that you're standing on such a classic airplane, 1946 air coupe.
Totally refurbished.
Frankly, I think it's the best picture in the whole, and I'm not just saying that.
Yeah.
I thought it was just a great, great way for Playboy to help the girls that got picked after Enron and all of its executives allegedly had taken all that money from the shareholders and enriched themselves at the expense of not just the shareholders, but the employees as well.
Thank heavens for love. Enron was the pride of Houston and one of the most admired companies in America. Originally a business that owned oil and gas pipelines, it used the internet to trade everything from energy to broadband capacity. Not everyone understood everything it did, but it seemed to be a success. Its top executives were written up as revolutionary geniuses, standard bearers of the new age of capitalism. In fact, they were more like cheap conjurers. Many of their profits were no more than accountants' tricks. Enron hid bad debts and lousy deals, and when the company collapsed, thousands lost their jobs and pensions. Playboy was fun, but now Janine needs a real job.
I haven't been interviewed in a long time. It'll be very interesting to hear what they have to say.
It wasn't just jobs that Enron's employees lost. Their pensions disappeared too. In America, your company pension goes into stock market funds called 401ks, whose value, believe me, can go down as well as up. Like many companies, Enron's 401k was heavily invested in its own stock. When the share price started to drop, top executives tried to dissuade employees from dumping the stock while cashing in millions of dollars in share options themselves. Janine didn't lose everything. Plenty of others did.
One thing to be my age, or, a younger employee, however, to be substantially older and place everything into your 401 and lose it all. I almost thought that there were going to be more cases of, suicide, I guess, because people lost everything. Ready?
As more firms have followed Enron into trouble, so more pensions have been hammered. More than anything else, that's what's got Americans hopping mad. Dan Hedges is a former United States attorney in Houston. His law firm overlooks the offices once inhabited by Enron's disgraced accountants, Arthur Anderson. Anderson audited many of Enron's illusory deals and were convicted of obstructing justice after shredding documents. It wasn't a brave new economy. It was old-fashioned falsehood.
The impact of the collapse of Enron on Houston has been profound, and Houston was very proud of Enron. Houston was very proud of some of these other energy trading companies. They're among the most dynamic, fast-moving, forward-thinking companies in the United States. And to find out now, not just that there was some criminal activity going on, but that there were practices that maybe made the very appearance of success an untrue appearance, a false appearance. And so that's depressing to the city. The city will survive it and the city will do just fine, but it was more of kind of a shock to the system.
Americans believe in the right to get rich, but they're angry at the shenanigans inside Enron. Normally, they don't resent great displays of wealth. Not anymore. Just Stuff, classy name, is a luxury goods shop owned by Linda Lay, the wife of Enron's former chairman, Kenneth Lay. In fact, you can buy things there from the 3 houses the Lays had to sell when Enron went bust. Linda needs the money, poor baby. She went on national TV to tell America how hard up she now was.
I don't think there's anything less than $1,000 on these price tags here. And she pleads poverty. It's unreal. This makes me sick. This makes me want to vomit.
Andrew Fastow was Enron's chief financial officer. He made $50 million over 5 years, but this week he was charged in federal court with corporate fraud. Janine, who's still looking for a job, took us to see his new house.
This is the former CFO's mansion that he's just building now. I heard on the news not that long ago that the government was thinking about taking it over. So we'll see. Hopefully he won't get to move in here. This is another stomach turner today.
Jeffrey Skilling was Enron's chief executive officer, but resigned just before it went bust. This little bungalow is his home. Mr. Skilling testified to Congress that he knew nothing about the complex deals that led to Enron's downfall.
Turns your stomach just to see how lavish their lifestyle is after leaving us with nothing. It's very pathetic.
The guy at the top, though, was Kenneth Lay, chairman of Enron, guaranteed to be at every social event in Houston, philanthropist, chum and fundraiser for President George Bush. Bush used to call him Kenny Boy. It's a Texas thing. When the American media decided that businessmen were the new heroes of our time, Ken Lay was one of the first to be anointed.
Ken Lay and his wife reside here at the top of this townhouse, this high-rise building. It's nice to see that they're still living in such lavish lifestyle after what they did. I don't trust the stock market at all now. No way.
Enron's not the whole story. America's seen a rash of corporate trouble. Sure, there have been bad apples, crooked executives, but something's gone wrong with the system. Businesses have wanted growth at any cost to send share prices soaring and make everyone rich. Books have been fiddled, profits inflated, and those meant to keep the system honest, lawyers, accountants, market analysts, lost their sense of duty in the scrabble for wealth. You could see it coming as far back as the 1980s. Remember the 80s? Manhattan dripped gold. It was when Hollywood made the movie Wall Street with its mantra, greed is good. And when New York novelist Jay McInerney peeled away the shiny surface of the market to show the rotten flesh beneath.
It was kind of mass hypnosis, castles in the air. She had to be careful what she said around the office. Wall Street was pumped up. It was like a cocaine jag, everyone grinning fiendishly, talking too fast, not quite focusing on anything. The clients, too, especially the clients. Corinne tried to moderate their greed, urging them to look for real value. But everybody wanted instant gratification. They wanted risk without downside, big beta factors and guaranteed return. They wanted sex and drugs and rock and roll. If you look at a book like Vanity Fair or Trollope's The Way We Live Now, it seemed to me that they were essentially, about New York in the 80s, except that the costumes and the accents were different. The election of Ronald Reagan coincided with a kind of this sudden gold rush, really, in Manhattan.
There was a new mood in business schools. Amitai Etzioni, now at George Washington University, taught ethics at Harvard in the 80s.
It was drilled into them that the only thing that matters is the bottom line, is how much money you make, they were told, and you couldn't survive if you were, quote, ethical. And that's exactly what they're teaching the students, and the students took to it like ducks to the water.
The electronic buzz of fast money hummed beneath the wired streets, affecting all of the inhabitants, making some of them crazy with lust and ambitious, others angrily impoverished, and making the comfortable majority feel poorer. Late at night, Russell or Corinne would sometimes hear that buzz in between the sirens and the alarms and the car horns, worrying vaguely, clinging to the very edge of the credit limits on their charge cards. What happened after 1987 was that more and more Americans saw the stock market rising and wanted to participate until by the middle of the last decade, more than half of our citizens were invested in the stock market. This is a big historical shift. And I think that the average citizen, to some extent, was caught up in this greed fest.
If you weren't in the market, you were an idiot. Deregulation, round-the-clock trading, electronic screens, money whizzing to the far side of the world in an instant. Man, it was exciting. It was the business. It was the place to be.
Let's hold it for 3 to 6 months.
And with the 1990s came a whole new game, the best game in town, seeming to offer everyone, rich and poor, the chance to be a winner. High technology, telecoms, above all, the internet.
I'm going to start an internet company.
In 1998, Khalil Isaza Tusman and his business partner Tom Herman started GovWorks, which tried to use the internet to simplify things like the payment of parking tickets. A film is made of GovWorks' roller coaster ride, way, way up and way, way down. But in the early days, before reality set in, investors could see nothing but growth and profits ahead.
I think that what happened in the market is that everybody became excited about the advent of a truly transformative new technology, which was the internet. And of course, it wasn't the only area that was being funded in the venture capital industry at the time. There was a massive boom in the telecoms arena as well. If you look across even investments in those areas, they were often related to internet protocol or internet technology.
David Hornick is now a venture capitalist in Silicon Valley. During the 90s, he was a lawyer representing many startup internet companies.
I mean, we literally didn't sleep for 3 or 4 years. I was working harder than I'd worked in New York City, but I was having, 100 times more fun. It was like a drug. And these companies were coming in droves. We were literally turning away 9 out of 10 companies that wanted us to represent them because we didn't have enough time in the day or in the day at night. I mean, that's how crazy it was.
Are you ready? Yeah! What are we gonna do? When are we gonna do it? Every day! How are we gonna do it? Every way!
People were dropping out of Stanford in hordes to start companies because there was this incredible feeling at the time, like every year lost was millions of dollars in someone else's pocket.
Who would have thought it? Business had become sexy. Business leaders, heroes, celebs, with homes alongside those of the movie makers and rock stars in the hills above Los Angeles. They were capitalist revolutionaries who were going to change the world, which was great, unless you were the boss of a boring old company making widgets. How on earth were you supposed to keep up with the new kids on the block? You want to know what the boom was like? Don't ask a nerd who spent the 90s writing software. Ask Mariam Keller, who was a typist on the minimum wage before she started selling real estate to the dot-com millionaires. Did she hit the jackpot? Did she ever?
Well, the very factor enabled us to buy this property was my huge commission checks coming in from young millionaires in Silicon Valley buying multi-million-dollar properties, and multi of them. So the year 2000 was something that was totally abnormal, wonderfully abnormal. So there we are.
Mary Ann Keller.
Well, this property is for sale for $25 million. It was on the market in 2000 for $46 million. Justification is not my job. The supply and demand is what justifies the price. If you have the money, you pay for it. This is a magnificent door. It's all handmade, gold leaves. Come on in. Here's the butler pantry. I just want to show you something really special in this house. This bathroom can be done somewhere around $30,000 to $50,000. Just look at the gold leaf finishes on these. Aren't they fantastic? Isn't that something? And the angel. They also have a little teapot collection here. Of course, it's not going to be like British teapots, but hey, we're happy. And this is our pub room. Look at the train up there. Basketball, you know, Americans and basketball. The cost of this room is approximately $120,000 to $180,000. And here we have another rest area. To the master bedroom. Now you see, when somebody has $150 million, spending 46 on this is really nothing.
Now, let's be clear, the 1990s were terrific. For many Americans, it seems as if the years of prosperity, when they were fat and happy, would never end. We all got caught up in the fever. Hell, I went to work for an internet company myself, dreaming of being able to afford endless meals as good as this one. Delicious. Steve Reichert worked at one of the most ambitious Silicon Valley companies, which tried to get the internet into every American's home. At its peak, it was worth around $35 billion. Never made any money, but hey, back then, who cared?
Well, actually, I started at Excited Home in 1997. It was pretty much right in the middle of the boom of everything going on. They were already making plans for building the 4 buildings that you see over here into sort of the corporate campus. And it was really just a time where everything just seemed to be growing. The feeling around the office was a little bit of just kids in candy store. I mean, there were a lot of kids in their mid-20s or, you know, late 20s, and we were all just, at least on paper, worth so many dollars, so many X numbers of millions of dollars. and lots of people who were already figuring out, 4 years from now, the number of boats I'm going to buy in Miami Beach and the house I'll have in the Hamptons and all the different things they were going to do with all this money. I don't know if it was as much greed as much as it was just people really just never thought that it could ever end.
Not all high-technology companies are empty dreams. Sun Microsystems, for example, has 39,000 employees in 170 countries and nearly $20 billion in annual revenues. Sun's boss, Scott McNealy, is another of the heroes of American capitalism. But he's got a successful company to back up the title. What explains the ridiculous valuations of internet companies?
Analysts were recommending stocks not based on modeling cash flow, net present value of the future cash flows, but rather on whether they thought the stock was going to go up or down. And it had nothing to do with, the realities of sustainable business models, all the rest of it. And I think people tended to not realize that 10 to 100 times revenues as market valuations was just wacko. There's no math in the world that can support that. But we all just kind of ignored it or pretended it really wasn't out of control or whatever. Nobody really called the bubble.
For a while, what mattered wasn't what you made. It was how big your dreams were about convincing the markets you were the coolest thing since sliced bread. That was what the new economy was all about. But if you were already big, well-established, old economy, it felt like you got left behind.
We were in a time when kids were starting companies that were worth $0 one day and hundreds of millions of dollars the next. But it was very hard for a billion-dollar company to grow at anything like that kind of rate. And so I think that there were folks who were faced with this problem of new economy companies growing at an incredible pace and old economy companies looking stagnant in comparison. And the only way that they could possibly give the indication that they were growing in the same way was to cheat and was to lie.
Don't take his word for it. Felix Rohatyn, an investment banker, is one of the grand old men of Wall Street.
I think people's expectations certainly were affected by the bubble, by the dot-com bubble, and by the high-tech 150 times earnings, stock prices, and big options, etc. of the 90s. Well, people see this and they say, well, if he can make $100 million, why can't I? People have always been greedy. But being greedy in itself isn't criminal. I mean, it may not be elegant, but it's not criminal. People have gone over the edge here and have done criminal things as a result of their greed.
The money we made in dot-com boom time, it was just unbelievable. I mean, totally unbelievable. My buyers were pushing me to pay way more than the asking price at the time, like go over $1 million. Does the seller want $2 million? Go over $2 million. Doesn't matter. All those young guys with dot-com money. Danger, danger. Love that. I really love that. Danger, danger. It was amazing. It was just amazing. Danger, danger. Like a dream. Like a dream.
Then one day, everyone woke up.
For me, I don't think there was actually a moment. It was more kind of watching you go over sort of the top of the roller coaster. You sort of saw it coming, you knew it was coming, you weren't sure exactly when, and you were just waiting, and it eventually did.
Believe me, at my internet company, we knew exactly that feeling.
As you can see, just up ahead there are the traffic lights they had to put in because there were so many employees walking back and forth between the two buildings. And it's really odd looking back at it now, just seeing it blinking yellow and nobody walking across at all. It definitely feels very strange and definitely a bit sad that you're looking back at all of the opportunities and all of the optimism that was here in 1999, early 2000.
what we lived through in the economy in the last few years was like a game of musical chairs. And when the music stopped and there weren't seats for everyone started pointing fingers and blaming each other for the absence of those seats. When in reality, we were all complicit in the game. Yes, it was about greed, sure, but it was about greed at every level, not only in the executive suite, not only in the investment bankers, Riverside office, not only in an entrepreneur's garage. It was greed as well in the living room of individual investors who weren't riding fundamentals, who weren't doing research, and were plunking down dollars because they wanted to make a quick buck. And it was Vegas. Everyone was in Vegas.
East Hampton Airport, gateway to the legendary Hamptons on Long Island, a short hop from New York, where the investment bankers and stockbrokers spend the weekend at their retreats on the Atlantic Ocean. This year, it's not been a happy place. The market's crashed, and it isn't just high-flying internet firms that have been brought down. Old corporate giants are suffering too. Not many observers were prepared for the scale of the losses. Most of those paid to take a cool look at the economy seem to have just given up. Jim Chanos, who runs a Wall Street hedge fund, was one of the few who was skeptical about Enron.
I think that because there was so much money at stake, people aren't willing to look behind the curtain because there really isn't a vested interest in looking behind the curtain for most constituencies in the financial markets. Enron was not what it appeared to be, but yet at that time it was still a darling on Wall Street. It was only when one really began to look behind the curtain that one saw that the emperor had no clothes. One of the things until very recently that was great about the American capitalist system was that people understood that by risking their money, they could either make a lot of money or lose a lot of money. Americans understood that generally, they're risk takers. But what they always thought, up until recently, was that the game was fair.
America's founding fathers, of course, had their own high-minded ideas on how business should be conducted. For Americans now, the great question is, who can you trust? Big business and finance have let them down. In the last 18 months, the stock market, on which so many pensions depend, has lost 30% of its value. The prospect of untold wealth and retirement at 50 has gone poof, just like that. But if people don't have confidence that American capitalism is based on some old-fashioned principles of honesty and decency, they won't invest in American companies. An economic recovery for both America and the world will be long delayed. Wall Street would be a good place to start the reforms. Many investors rely on advice from stock analysts in the giant banks. But in one case after another, the advice has turned out to be shoddy. The suspicion that some analysts were simply boosting firms with which their banks had deals. Sean Ryan was an analyst at investment bank Bear Stearns. He wrote a negative report about First Union, a firm with which Bear Stearns was setting up deals.
I was treated one day to a visit by the director of research who launched into a 10 to 15 minute tirade on how reckless I was being by publishing this negative research, since it was imperiling some $10 million in trading revenues that other parts of Bear Stearns derived from transacting with First Union. I was very surprised to have my boss in my office yelling at me, literally, for having the temerity to offer an honest opinion about this company. And for doing that, I was becoming a pariah at a firm that I'd hitherto enjoyed a nice career at. I was really in a situation where I was forced to choose between my integrity and my pocketbook.
Bear Stearns deny Ryan's claim, saying that his comments on First Union had degenerated into a personal attack on its management. They insist they're committed to giving the best independent advice. But the point here isn't about the ins and outs of one case. It's about whether Wall Street has a corrupt culture that needs to be changed. It's not just wrong to give advice you know is inaccurate. It's illegal too. And there are now nearly 50 investigations into analysts' advice underway.
You know, what you've seen on Wall Street over the past several years is, in many cases, simple fraud. And the fact that it's carried out by people with Ivy League degrees doesn't change the fact that it's fraud. You know, to some degree, there's always going to be a certain number of rogues in any profession, and all the more so when you have this much money at stake. But I think even more than that, you have a lot of good people trapped in a corrupt system. It's not the few bad apples, it's that the system has caused even the majority of reasonably moral people to act badly.
He's not a lone voice. Regulators now want to reform the whole way in which shares are bought and sold. And already Merrill Lynch, the bank and stockbroker, has been fined $100 million for touting shares it knew were junk. Jake Szymanski, a Wall Street lawyer, has represented many people in civil suits against Merrill Lynch. He's won damages for clients who lost their fortunes following lousy advice.
Many of the top Wall Street firms have misled and defrauded the average public investor regarding their stock purchases. Many people have lost their entire pensions and life savings following the stock recommendations of the top Wall Street firms. These firms need to be held accountable.
Okay, thank you very much for calling. Bye.
I've had a number of people that have called that were thinking of committing suicide because of losses. Now, we talk to everybody that calls. In fact, I have a secretary, Barbara, who answers the phone. I call her the triage nurse at the emergency ward so that she can deal with individuals who are in distress.
She hoped to retire. All her money is gone, and I asked her to send in the information.
Did she say that she got these research reports from Jack
She
Rubb?
got research reports. Her broker insisted that this was, you know, the hottest thing. It was going to go up, and she's got nothing left. One gentleman lost $4 million just following reports online. I had an elderly gentleman in his 80s. He called me every single day. He said, I might as well just kill myself. There's nothing, I hear these stories every single day.
Let's try and
if I could take the money out of my own pocket, so help me God, I would give it to these people. It's tragic. It's really tragic.
We probably shouldn't get too misty-eyed here. Szymanski's got a little place in the Hamptons himself.
To a certain extent, I feel like a viper in the middle of a nest out here among all of the Wall Street sharks. And, but, you know, I've got to enjoy myself, too. The reason it took so long to discover what was going on was that there was a way of doing business on Wall Street, which was business as usual. It all came crashing down in the first quarter of 2000 after people realized that there was nothing to these companies. I say that the emperor had no clothes. These analysts had nothing behind them other than salesmanship, and they were touting these stocks. These stocks weren't worth buying. They knew it, and they need to be held accountable.
In Washington, the politicians were unprepared for the rash of financial scandals. They'd been happy to take credit for the boom years of the 1990s and to pocket campaign contributions from big business. They didn't seem to realize that this crash was different. Millions more Americans than ever before now had their dreams and their pensions tied up in the stock market. This is K Street, Washington's real corridor of power, where the lawyers and lobbyists for the big corporations have their plush offices. In the spring and summer, they started working with congressmen to craft new laws to increase financial disclosure and set new penalties for corporate fraud. With the market crashing, Even the president knew something needed to be done. Thanks for the tip, George. Together with reforms to the stock market, the administration wants the new laws to rebuild trust. It's a simple idea. Chief executives will no longer be able to plead ignorance of what their number crunchers were up to. Not everybody likes the idea of more red tape, but the prospect of corporate crooks doing time is wildly popular.
The only job that the government ought to be doing is not creating more regulations, more overhead, and more fear, and more opportunities for lawyers to sue everybody in the corporate chain. Rather, they should be throwing in jail the people who are perpetrating fraud. If they're lying, cheating, stealing, creating any kind of fraudulent activity, throw them in the slammer. And I don't mean club fed, I mean throw them in, the drunk tank downtown.
Jail has a wonderful way of clarifying people's moral activities. We finally are seeing that now in 2002, after the last few scandals proved to be so large that the public was simply disgusted.
Public opinion has changed. The public will not put their money in the stock market until they've seen reform. So I think all of the conflicts, all of the corruption has shaken investors to the core, and it's going to hurt not only the American economy, but the global economy until the stock market can once again be reliable and have the trust of the investors.
My fear is that we've burned a whole generation of investors in the United States, and it'll take some time to entice the public back into the market, but you can be sure that it'll happen again at some point. Greed and fear are pretty strong emotions both ways.
Right on both points, I'd say. The American economy is poised on a knife edge, and if it goes south, so will the rest of the world's. But soon enough, it'll bounce back. American business is amazingly resilient and creative. Who knows, the next big thing may be just around the corner. And when it comes, trust me, we'll all go crazy for it, just like we did in the 1990s. Okay, I'm not going to go to work for a .com again. I'm not that stupid. But biotechnology, now that's different. It's huge. It's mega. We're going to love it.
If the market bounces back and the economy starts roaring again, we'll repeat this cycle in pretty much the same fashion within the next decade. Study of literature teaches us that human nature doesn't change overnight, even though that seems to be the very premise on which American society is based.
There's a lot of money to go around. 42,000. As you saw the CL500 there, also on consignment, 98,000. All of a sudden they're rich. They have all kind of money to spend. This one is $96,800. Billionaire in paper, so they have to spend it, In California, this is where all the money is. Porsche 911 twin turbo, very expensive. They just found instant wealth, so they like to spend their money.